Hey everyone, ready for another deep dive? Today we're tackling China's economic situation.
Yeah, some interesting things going on over there.
We've got some reports on China's latest numbers, plus there's that whole thing about a possible Trump comeback in the U.S.
Oh yeah, that could definitely shake things up globally. Historically, a returning Trump administration tends to, uh, well, they tend to implement policies that lead to a stronger U.S. dollar.
And a stronger dollar means what exactly? For like the average person?
Well, it makes U.S. goods pricier for other countries, impacts trade,
Mm-hmm.
you know, and it could even create some pretty interesting investment opportunities in U.S. markets.
So U.S. stocks might become more attractive. Okay, I'm listening.
Yeah.
But let's talk China. Their October total social financing, that's TSF, came out recently, and it wasn't exactly what analysts were expecting.
Right. Before we get into the nitty-gritty, let's quickly define what TSF actually is. Think of it like a monthly checkup on China's economy. It shows us how much new financing is flowing into their system, like how much money is being invested in different businesses and projects.
So it basically tells us how healthy their economy is.
Exactly. Gives us a good sense of the overall economic activity.
And this time it sounds like the checkup wasn't so great.
Yeah, October's TSF was lower than predicted, came in at 1.4 trillion yuan.
Okay, 1.4 trillion. But where's that money coming from?
Well, that's the interesting part. A big chunk of it, like a really big chunk, comes from government bonds. We're talking 1.05 trillion yuan to be exact.
So basically the Chinese government is borrowing a ton of money to keep things running.
Right. Kind of like using credit cards to cover all your household expenses. Not exactly a sustainable strategy.
Yeah, definitely not a long-term solution. But what about the consumers? What's happening with spending in China?
Well, consumer loans did go up, but not as much as experts predicted.
So people aren't as confident in the economy, holding back a bit.
Seems that way, but there's this interesting detail. Short-term loans, especially for electronics, actually jumped up.
Oh, really? Why is that?
It seems the government's giving out subsidies for electronics on those big online platforms like JD.com and Taobao.
So they're encouraging people to buy more gadgets. Clever. But is it actually working?
Well, it definitely boosted sales for electronics. But the question is this real consumer demand or just a temporary spike because of the subsidies? To really understand consumer confidence, we need to look at the bigger picture, like their overall spending habits, their savings rates, all of that.
Okay, so government's pushing for more spending, but consumers are being cautious. What about businesses? Are they investing and expanding?
That's the concerning part. Corporate loans, especially those short-term ones businesses use for daily operations, they actually went down in October.
Huh, so they're being just as careful as consumers. Any clues in the data as to why?
Well, if you look at the trends in M1 and M2 money supply.
Hold on, quick refresher. M1 and M2, what are those again?
Okay, so M1 is the most liquid money ready to be spent. It's like the cash you've got in your wallet in your checking account.
Got it. So M1 is the money ready to go.
Right, and M1 actually decreased, like a lot, 6.1% year over year. Meanwhile, M2, which includes things like savings accounts and time deposits, that grew by 7.5%.
So more money is sitting in savings and less is being spent. Is that because businesses and people are worried about what's coming next for the economy?
That's the likely explanation. Seems like companies are holding onto their cash instead of investing. Not exactly a vote of confidence for future growth.
Okay, so government's trying to boost the economy, but both consumers and businesses are hesitant. It's a mixed bag for sure, but there's another piece to this puzzle, right?
Mhm.
We can't forget that China's playing on a global stage.
Oh, absolutely. We can't ignore those external pressures, especially the trade tensions with the U.S. It all adds another layer of complexity to their situation. It's kind of like a global chess game, right? China's trying to navigate these trade tensions with the U.S. And one tactic they're using, lowering tariffs for their partners in Europe and Asia. They're even making it easier to get visas.
So there's strengthening ties with other countries, trying to build up their network outside of the US. Smart move.
Yeah, but it's not that simple. I mean, take the EU, for example. They're not exactly jumping at the chance to become super reliant on China.
Why not? I mean, less tariffs, easier travel. That sounds pretty good.
Well, the EU's got their own concerns about some of China's trade practices. Plus, they got to think about their relationship with the U.S.
So China's trying to play both sides a little.
In a way, yeah. It's a balancing act for sure. But it's not all about the international scene. They're also trying to boost demand at home, get their own citizens spending more.
How are they doing that?
Well, some of their methods are a little surprising. For example, they're adding more holidays to the calendar.
Seriously. More holidays.
Yeah, the idea is that if
Hmm.
people have more time off, they'll spend more money, right?
Makes sense, I guess. But what about, like, productivity? Will that take a hit if everyone's constantly on holiday?
That's a valid point. It could backfire. It's definitely a bit of an experiment.
So maybe not the magic solution. What else are they trying?
They're also messing with property transaction taxes, trying to, stimulate the real estate market.
Isn't China's real estate market kind of a bubble waiting to burst, though?
Yeah, that's a big concern.
Yeah.
But they're hoping these changes will encourage more activity, get things moving.
It's risky, though, right? I mean,
Yeah.
stimulating a market that's already potentially inflated could make things worse.
Definitely a tightrope walk. They're trying to encourage spending without making the whole real estate situation blow up.
So they're juggling a lot here, trying to, like, boost demand at home, manage their global relationships, all while dealing with this heavy reliance on government spending. What does all this mean for the average person, like someone just trying to understand what's going on in the world?
Well, the global economy is all interconnected, right?
Yeah.
What happens in China has a ripple effect everywhere. So by understanding these trends, people can make better decisions, whether it's about investments or just, you know, understanding the news.
So for someone who's thinking about investing, what should they be watching?
Well, a strong U.S. dollar could make U.S. stocks look pretty good. But remember, there's always risk involved with investing. Do your research, understand your own risk tolerance, and maybe talk to a financial advisor before making any big decisions.
Good advice. Diversify, don't put all your eggs in one basket. What about China specifically? What should we be watching for in terms of their economic future?
It's all about those long-term trends. Can they shift away from relying so heavily on government spending? Can they create an economy driven by genuine consumer demand? And can they manage this whole real estate situation without it crashing down?
So much uncertainty. What else could throw a wrench in their plans?
Yeah, a lot of potential roadblocks. I mean, the relationship between China and the U.S. is always a big factor. And, there's always the chance of some crazy, unexpected event.
Like a pandemic. Or maybe some new tech that changes everything.
Exactly. Those are the wild cards that make the global economy so unpredictable, so exciting, and a little scary sometimes.
Okay, so as we wrap up this deep dive into China's economic situation, what are the key takeaways? What should our listeners be thinking about?
I think the big takeaway is that China's at a crossroads. They're trying to change their economic model, but it's complicated. Relying on government spending to fuel growth is a risky strategy, and it's not clear how long they can keep it up.
So it's like they're juggling a bunch of things at once. Government spending, consumer confidence, international trade, that potential real estate bubble.
Yeah, and if they drop any one of those balls, well, it could have a big impact, not just for China, but for everyone.
So for those of us who want to stay informed, maybe even spot some investment opportunities or risks, what should we be paying attention to?
Keep an eye on those debt levels.
Yeah.
How much is the government borrowing? And is that money being used wisely or just to keep things afloat?
So look for signs of real sustainable growth, not just like artificial stimulation.
Right. It's like, a healthy plant grows naturally, but a plant that's been force-fed fertilizer, that's not so sustainable.
Great analogy. And of course, there's the whole global landscape to consider. How China manages its relationships with the U.S. and other countries will definitely shape its economic future.
Absolutely. It's a complex, ever-changing situation.
So a lot to keep in mind. But that's what makes following the global economy so fascinating. Always something new happening.
Definitely. And I think the most important thing for listeners is to stay curious, ask questions, and be ready to adapt to whatever comes next.
Couldn't have said it better. Thanks for joining us for this deep dive into China's economy. Hope you found it informative. Until next time, keep learning and keep exploring.